Most traders lose money because they scalp without a real plan. But today, I'll show you a 1-minute scalping strategy that actually works. You might ask, what does scalping mean? To put it simply, scalping means taking small but large profits from the market. In this method, the trader stays in a trade for only a few minutes or even a few seconds, and exits quickly when he makes a small profit. The goal is to accumulate a good profit with a large number of trades. Now, why 1 minute? Because the 1-minute time frame gives you more opportunities. In the few minutes we are talking about, 2 or 3 trading positions may occur on the chart, but this time frame is also full of noise. Therefore, we need a strategy that filters out the bad signals. Now let's move on to the tools we are going to work with. First of all, the EMA or exponential moving average. This indicator is an exponential moving average that gives more weight to recent data. This means it reacts faster to price changes. When we set the EMA to 15, it means that we are following the price behavior in the last 15 candles. This EMA acts as a trend filter. If the price is above the EMA, it indicates that the short-term trend is bullish, and if it is below the EMA, it indicates that the trend is bearish. The second tool is the SMA, or simple moving average. Unlike the EMA, this indicator gives equal weight to all past candles. We set the SMA to 7 because we want to examine faster price movements. In fact, the short-term SMA helps us notice changes earlier, but because it is very sensitive, it may also give many false signals. That is why the combination of EMA 15 and SMA 7 is very good, because the EMA shows the overall trend and the SMA confirms the quick entry. But you cannot decide with these two indicators alone. This is where we come to the third tool, the RSI, or Relative Strength Index. This indicator fluctuates between 0 and 100. When it is above 70, we say that the market has entered the overbought zone, and there's a possibility of a fall. When it is below 30, it means that it is oversold, and there is a possibility of a rise. The first step is to set the time frame to 1 minute. Remember that this strategy is designed specifically for this time frame, and if you test it on higher time frames, the results will be different. Now let's move on to the indicators. From the Indicators section, search for the term EMA. When it is added, click on its settings and set the period to 15th. It is also better to choose a constant color such as red or bright blue so that it is always easy to see. Go back to the Indicator section and this time search for SMA. When it is added, set the period to 7. To avoid confusion, it is better to choose a different color, for example, green. Now it is the turn of the RSI indicator. When you add it, set its period to the default 14. Usually this is enough. Turn on the 30 and 70 levels as well, as that's exactly where we need them. You now have 3 tools on your chart: a 15-day EMA line that shows the overall trend, a 7-day SMA line that shows rapid swings, and the RSI at the bottom of the screen that shows overbought and oversold areas. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. The best entry position is obtained. In this strategy, we have 3 filters: EMA 15, SMA 7, and RSI. First condition, general trend. First of all, we need to see what direction the general trend is. When the price is above EMA 15, it means that the short-term trend is up and we are only looking for buy trades. On the contrary, when the price is below EMA 15, it is down and we are only looking for sell trades. This prevents us from entering a trade against the general trend. Second condition, quick confirmation by SMA. Now it is the turn of SMA 7. Suppose the trend is up and the price is above EMA 15. If SMA 7 is also below the price and its slope is upward, It means that the upward movement is confirmed, and it can be a good entry point. The same is true in the case of selling. The price is below EMA 15, and SMA 7 is also above the price and moving downward. Third condition, RSI for precise timing. Now we need to make the entry time more precise. This is where the RSI comes into play. To buy, we wait for the RSI to come close to the 30 level or even a little lower and start to rise again. This means that the selling pressure has subsided and buyers are entering. To sell, the opposite is true. The RSI should rise above 70 and start to fall. Entry summary. So in summary, to buy, the price should be above the EMA 15, the SMA 7 should be below the price, and the RSI should be moving up from the oversold zone. To sell, the price should be below the EMA 15, the SMA 7 should be above the price, and the RSI should be moving down from the overbought zone. Together, these three conditions create a very strong filter and increase the probability of success. Exit rules. There are three main exit scenarios. Price crosses with EMA or SMA. If you are in a buy trade and the price falls below the SMA 7 or EMA 15 again, this is a sign of weakening trend and a good time to exit. Conversely, if the price returns above the SMA or EMA, it is better to close the trade quickly. RSI reversal signal. When you are buying and the RSI reaches above 70, overbought, the market is most likely ready for a correction. This can be an exit point. When selling, when the RSI drops below 30, it shows that sellers are weakening and buyers are entering the market. Take profit target. In scalping, we do not look for big profits. We set small but safe targets. For example, 5 to 10 pips in Forex or a small percentage in stocks. 1. Take chart noise seriously. A 1-minute chart is full of random movements that have nothing to do with the main trend. Therefore, always try to trade only when the three main conditions of your strategy, EMA, SMA, and RSI, are in harmony. If even one of them does not confirm, it is better not to enter. This will increase your chances of success. If you found this video useful, be sure to like and subscribe to the channel so that you do not miss future tutorials. Turn on the notification bell to be the first to see new videos, and be sure to write in the comments. Which part of this strategy do you think is more important? Entry, exit, or risk management? Thank you for sticking with me until the end. I hope you are always profitable and successful in your trading.